All right, welcome to part two of market structure. Previously, we talked about how I just briefly spoke on why the market moves when it moves, and it moves to the process of buying and selling, and the volume of buying and selling. The more volume of buying and selling, the more the market moves. There's more to it that I'll get into later on, but I just wanted to give you an idea, as to why the market moves. And then I went ahead and explained to you how um, to identify market structure, right, and the different market conditions. We went over three market conditions that the market could be in: uptrend, downtrend, and a ranging market. Hopefully, by now you understand how to identify each. If not, let me know. But it's pretty simple. I think you can understand it. So now we're gonna get into another section of market structure. I'm going to explain to you today structure points, breaks of structure, and zones of areas of interest. These all three essentially pretty much intertwined together, so they're going to be kind of like the same concepts. But I'll start you off with structure points. So essentially, structure points are just going to be points of structure. So when you look at these pivot points here, right, like where price goes from going up to down, like where these black dots are, these are going to be your structure points. All right, it's pretty simple. That's all you pretty much need to know about structure points. Just understand that these are areas of structure. All right, and then when I say zones of areas of interest, these zones and areas of interest lie within the structure points. So these are essentially the same thing, but just understand that structure points are just where price creates structure. If price were to just continue to go like this, there's no structure there. It's just going up. But if you were to, minimize that and then show it this way, there's structure here. There's structure to go off of. So that is the pivot points are your structure points. If you can hear Stella, bro, just I don't know, ignore her. Um, and we're gonna go into zones and areas of interest. Like I said, pretty much just structure points, but I'm gonna explain to you how they lie within. So essentially what zones and areas of interest are is it explains why the mar- the the market is deciding to pivot from these areas, right? So I'm gonna make another one of these things, like that, and then another uptrend here, just to give you an example. um Let me give you multiple examples here. All right, so again, these pivots here are your points of structure or structure points. Now zones and these are also what you would call zones, right? Because what is happening here is that price is um, reacting. All right, they're reacting from these areas, right? And that's what I really want you to pay attention to, right? What essentially what we're doing whenever we're looking at a chart is we are trying to find areas, right? Areas of interest where price is reacting, right? You want to find zones slash areas of interest, same exact thing, where price is reacting, right? You don't want to trade in a random ass spot because like you don't know what price is gonna do because it hasn't previously reacted at that zone before. But if you can see in the past, in the history, right, that price previously has reacted from this zone, right? It's reacted a certain way. It is there's a good chance, depending on, obviously I'm gonna show you that like what the difference between is a good and a bad zone, but there's a good chance that the price is gonna redo what it did before, right? So take this for example. Price creates a high here, right? We react. This is a zone area of interest now. Comes down, creates this low, and then from this low as well, price comes up, right? And then creates another high. So this here, if I'm trading this market, right? What I'm gonna do, I'm gonna mark this area here because what happened here is that price reacted and it had enough volume to break a high. So this is what you would call a break of structure, right? So like I said before, remember, these pivot points are what we call structure points, right? So what happens when price breaks above that structure point? That's what we call a break of structure, right? So price retraces and then it comes up and breaks this point of structure. That's what you call a break of structure. So what's the importance with these break of structures, right? What structure breaks show you is an increase in volume in a certain direction, right? So if price were to come up, specifically up, and break a structure point going to the upside, that is going to tell you that there's a lot of buying volume. Like I said before, volume is necessary to move the markets. That is what moves the markets, volume. So if you can are able to identify that price has a lot of buying volume through identifying what again, a break of structure, right? Because we can identify that this is a structure point and then we're creating a higher high. Like I said, what happens when we create a higher high? We have an uptrend, right? So it all ties in together here. So I'm gonna mark up this area here. Why? Because I had enough volume to break structure. We're going to be looking at breaks of structures all the time. That's the main reason why we look at the charts. All right. So this area, I'm gonna mark up a zone because it's my area of interest now because I had enough volume to what? Break a high, break a structure point. All right. So I assume you understand it at least a little bit now. Obviously, you're gonna have more questions. You can always rewatch this area, but I'm gonna say it again. All right. So I have this area marked up. Price makes a higher high. Okay, so now ding, we're in an uptrend. So what I'm gonna try and do, I'm gonna try and look for areas to buy. So here, price retraces, right? Creates a lower low, confirming that we're in an uptrend, right? But look, if you pay attention here, you can see that at the same area of this as this previous structure point, price rejected and went to the upside, right? Why? Because this was the previous area of where price has reacted from. Remember, we're looking for reactions. Pay attention to the reactions of certain areas, all right? That's why it's important to understand or to be able to identify structure points. Because what lies within structure points? Areas of interest. What is within areas of interest? Volume, all right? The reason why price pivots from these certain areas is because there's an influx of volume, all right? Buying and selling. People are either buying or selling at an um, inflated rate at these areas, and that's where you want to be getting in or out because you want to ride the volume. Because what I did say before, volume is what pushes the market, right? So within my specific strategy or system, we don't trade what this is called as a break and retest, right? You don't really have to understand what I'm about to say, but what happens is there's a break of structure, and then we retest that previous um, structure point. That's not in my strategy, so you don't have to understand, but just understand that there is a commonality here of um, an area of interest, right? So that is just I'm trying to show you that there is volume in certain areas of price. So I'm gonna go ahead and delete this zone and show you one more thing. That this next thing that I'm gonna show you right now is my setup. So what we see here, price comes down, right, creates a higher low, and then what happens from here? We're gonna break this previous structure point or this previous high, creating what? A higher high, further confirming that we're in a bullish trend. So our sentiment, we could be looking towards buying, right? So what happens here from this structure point down here, the swing low, this lower high or lower low or higher low, my apologies, price gets pumped with volume and breaks to the upside, right? So what does that tell you now? Alright, just imagine that everything to the right of my cursor or this dotted line doesn't exist, right? And then I see that price comes from this zone and goes up and breaks its previous structure point, right? So I'm gonna mark up the zone. Alright, so why am I marking up the zone? Like I said before, price had enough volume from this area of interest or zone to go up and break a previous structure point, right? This is significant because this is you need volume to break structure, right? So what I'm looking for next is I want to see price to come back into this area of interest, right? Because we're only trading within areas of interest because why? That's where the volume is. We're going to be trading where the volume is because we need volume to move in the market. All right. So what I'm going to be waiting for, remember, just imagine that we don't see anything on the right now. We just see this move up, All right, I'm gonna mark up this zone and wait. So slowly we see price retracing. Price enters my zone. What happens? Price goes up and breaks up to the upside. So if we were to go into a buy right there, we would be in the right move. All right. So why is the market moving from this area of interest? Because there's volume sitting here. Now in the next video, I'm going to go further in depth into as to why market is moving here. I don't want to give you too much information in one video. I want you to give you piece by piece, but I will give you an explanation as to. I don't want to just tell you, oh, write a box here, wait for price to go into this box and buy at the box. It doesn't really make sense. I want to give you the an understanding of the technicalities as to why the market moves, right? But I'll tell you that next video. All right. So just to sum it all up, brother, I want you to understand what structure points are, right? So structure points are these pivot points, swing highs and swing lows, where price reacts. You know, there's a reaction to this area, and then price goes the other way. Those are your structure points. And then just to clarify again, the reason why these structure points are important is that there was volume in these areas to turn them into a different direction, right? All right. So meaning if price were to come back into the area, there'd be volume sitting and waiting for it. So these are important points of structure in the market that you need to understand. Zones and areas are just the essentially just a structure point, but it's just I'm helping you understand like why these structure points are important, because there are zones and areas of interest sitting within them, right? And then the breaks of structures. This is probably the biggest thing I want you to understand. Like if you don't really understand what a breakup structure is after this video, I need you to ask me some questions, but I want you to understand what breakup structure are. All right, so breakup structure is when we create those higher highs and higher lows, or lower highs and lower lows. We have this, let me just do it right here. So say we're watching actively the market form right now. We have a low here, we have a high, lower low, and then price breaks. It breaks, pushes hard, breaks above that previous high. So this is showing us volume to the upside, right? And then we create a lower high, and then boom, we break again. Those are breaks of structure. Why are they important again? Because we're seeing volume being pushed to the upside. We're breaking structure to the upside. And this shows you that there is a increase and a influx of buying pressure, because like I told you before, there just similar as to there are zones at these points that I'm drawing here, right? Let me show you contrast. There are zones here as well at the top, right? Because here you can see that there was an impulse to the downside, right? And we want to take note of that. It's not just going up and up and up too, right? There are points in the market where prices retracing, and we could possibly take advantage of that, right? But the reason why those breaks of structure are so important is because it was so powerful enough to break through these zones, right? You see here, at these zones, price couldn't break through. It struggled to break through, and then it went in the other direction. That's powerful. But with these zones here, price came up into the zone, went down to the downside, came back into the zone, and what did it do? It broke through. So it didn't respect that zone. What that tells you is that there are more buyers than sellers in the market. All right. So yeah, that's pretty much it, bro. Really understand the importance of breaks of structure. I'm sure you can understand structure points. It's just these pivot points here. But the nuances of the structure points comes with the zones and the areas of interest. If you have any questions, I really hope you're jotting them down as you're watching the video, so you don't have to like think about them again. But any question, bro, like if you want to ask me to clarify anything, or just like how to do this, how to do that, how are you drawing this shit, ask me anything. All right, because I'm sure you don't know understand everything to the T right now, so just let me know. All right, so this is part 2 to market structure. In the next video, I'm gonna go more in depth into the why of the zones specifically, just to give you some clarity or understanding of as to why price is moving within these zones. So again, let me know if you got any questions, bro. Take it easy.